Good morning, everybody. Hope the week is treating you extremely well. In this week's video, I want to take a look at the four major U.S. indexes. I also would like to take a look at the divergence in the corporate bond market between lower rated debt and higher rated debt. The spreads that are there are very interesting. I want to take a look at that data set courtesy of Sentiment Trader. And this, I also wanted to take a look at the NASDAQ McClellan Summation Index. And finally, I wanted to take a look at the gold market in this video as well. So let's jump right into it here. Got the chart of the S&P 500 up. I haven't changed this since we looked at this last week. As you can see, we had mentioned this as the potential for an abandoned baby reversal candle if we got follow through in the next session, which we did. In fact, we followed through all the way back up, and we are basically pushing once again right in there at that all-time high zone. Now, of course, that's the really important level that we're watching at right here. Is can we break over that 31.55 level? If we can, basically what we've got to push up, a pullback, and then we would have that breakout to the next zone higher. And we talked about some upside targets from the original breakout. I can throw those back up here on the chart here for you guys. And really, we're looking in at that 32.50 level as that first upside target. So if we break that 31.55 zone, that's where I would expect us to go. Now, when we take a look at the RSI and the MACD here, it does look like we have the potential for the MACD to cross back up, the histogram to flip positive, and of course, we talked about RSI holding that key important 50 zone. It did do that and subsequently has made that bounce here over the last couple of sessions. So technically, stock market looks good here. As long as we can get up over that 31.55, that's going to be the major level that, of course, we're going to continue to pay attention to. We have the same setup on the NASDAQ as well. The histogram looks like it has potential to flip positive. MACD could flip over. We look at our RSI. It held that 50 zone. Our pullback was immediately bounced back up, and we were basically pushing right in there at that all-time high zone. So, again, if we were to make that push to highs, we'd have a move higher, a pullback, and then that next leg up, and that's that 1, 2, 3 very technically solid setup there. So of course we're going to continue to pay attention to that level. The Russell still fighting right at that 1620 level. We're a couple of points above it, but again, from a percentage basis, we're not even a percent above that breakout zone. That's kind of where we've been now for a couple of weeks. We really need to see this push to the upside, and I think if we can make a firm break over that 1640, which has acted as a resistance on both these push-ups right here, that bodes very well for a lot of things. And again, our upside target would be about that 1720 zone, but that would get that participation in the mid and small caps that we really have been missing. So we're going to pay attention to that as well. Dow very similar as the NASDAQ and the S&P, right? Same comments apply. A couple of differences though. RSI did break underneath that 50 level, fell into the low 40s, but did bounce back up above it. The histogram is not looking as strong, and the crossover potential not looking as strong. And actually, when we take a look at the prices itself, the NASDAQ and the S&P are basically pushing against those highs, and the Dow is a couple percent or so away versus a couple of ticks away. So a little bit weaker, right? We have more of this type of line than we do on the S&P, where it really is kind of that flat top line. So now, really kind of grasping at straws to pick something negative out here. Again, we look at it. It made a breakout. It back tested the breakout zone perfectly and made its bounce higher. RSI is over 50, and again, we're gonna watch that all-time high zone. If it breaks above that, that of course would be very bullish for us. Now, let's jump in and take a look at the NASDAQ McClellan Summation. Since we looked at this last, not a lot has changed. We really have just been trading inside this tight little range there on our breath reading since the beginning of November. We do not have a resolution either up or down at this point in time. Again, I think this is a very, very important thing to pay attention to. It's at a very important level to pay attention to. We talk about that 300 because of the action that happened back in April. And really the resistance zone has been between 2 and 300 when we draw this line in here as well. So right into a major key level here. On that breath reading, and what happens if we go up or we go down is very important, but really need to see a conclusive move, back below 200 or a move back over 300 there. Anything else is just kind of, again, trading inside that range. And we've seen that happen a number of times in the past. Of course, the August to September is a good example. We had multiple crossovers. We were sure if we were going higher, going lower, higher, and then finally we made our move up. And once, we made that break here, we saw that follow through in stocks as well. So pay very close attention to this. We're going to continue to look at this on a regular basis until we get some clarification on this. Now, I want to jump in and take a look at the divergences that have popped up inside the corporate bond market. We can notice here on this chart, this only happened 3 previous times when we've kind of crossed above this level, and we're taking a look at the triple C rated versus the BB yield spread in this. What it's saying is that lower rated firms are kind of signaling trouble, and because they're a lot more expensive to purchase than the the double B and above rated, and every time that has happened in the past really has been in the midst of some real big major global issues, and it's very interesting to see that happening right now. So are the riskier corporate bonds signaling something for us here, and that's really what we want to pay attention. It's only happened 3 times in the past 25 years, so the data set's not huge. But again, if we look where this happened, we had it right in the middle of major concerns. And of course, there was worry back in here as well. Ultimately, that didn't pan out. But we can see in '99, we did go higher from there before ultimately, a couple of years later, had that big sell-off, obviously. And the other time it happened really was in the midst of all of this panic back in 08, 09. So when we look at this, I don't really love data sets that only have 2 or 3 points because it's really hard to kind of, gauge the importance of something that's only happened 2 or 3 times. But when we look, and the couple of times that have happened is right around, major market moves, it's worth paying attention to. The risk to reward on this 6 months out is very skewed negatively. A year out, that disappears, and that's the last data set a year later we were up, and the first data set a year later we were up. But the middle 2 data sets there, 3 months, 6 months, we saw some very negative returns. And I think the 3 month out and the 6 month out really are a little bit of cause for concern here. So again, it's not the end of the world. It's just another thing that we need to pay attention to because it is very interesting seeing how wide that spread has gotten, and that has signaled some trouble in the past. Now, what this has meant, not only has it not been good for the stock market, but it has been very good for gold during those moves. When we look at the returns at that same point in time for gold, it's positive a higher percentage of the time, and we've had some 15, 16% size moves to the upside. And so what I want to look at here today is I actually want to look at the gold chart. We haven't done it in a bit, but it is very interesting, especially the action that has happened here over the last day or so. We had a what could be called here your cup and handle pattern play out earlier this year, where we had that nice bull, that handle, and then that sharp breakout, and we've essentially run all the way up into the middle of August, and then the market has kind of traded sideways down and making a potential another bull flag, right? So when looking at RSI is starting to make a breakout right here. When we pull in and look at price, right, we're right at that key level. I would say that 1490 zone on gold is a majorly important level, and really, if you're paying attention to the law of large round numbers, 1500 would be the really, really important level there. But if we look at this, we have kind of done nothing here except slowly kind of grind down over the last few months. Very small range. People have kind of stopped talking about it, stopped paying attention to it, and to me this looks like it has the potential to see that next leg higher. So I really want to watch that 1500 zone. I really want to watch gold here at this level. And we back this out and look at it on a larger time frame. We'll back it all the way out to a monthly time frame so that you guys can get a good understanding there. There is the potential for us to really have a long-term kind of cup and potential handle in here that's played out all the way since 2013 or so. And if we just draw a very important horizontal price action level, really that 1400 zone has been very, very important. We really haven't traded above that since 2013 until this year. So I think what happens in this market certainly at this moment in time could be very important. So I just wanted to put that on your guys' radar and discuss it in this video here. So as always, in summary, we're paying attention to those all-time highs here on the major U.S. indexes, except for the Russell, where we're looking for that breakout over that 1640 zone. And we're going to continue to monitor our breadth readings. We'll continue to take a look at things like the corporate bond credit spreads for you guys as well. I hope you guys have yourselves a fantastic week. As always, if you want to get a hold of me, feel free to reach out to us at the office at 814-580-9881, or you can shoot me an email to mtedeschi@perspectivewealthplanning.com. I'll see you guys next week.